Peter Schiff, the Fed will take all your money away. The Federal Reserve System, also known as the Fed, is the United States central financial system. The Fed is in charge of monetary policy and financial system regulation to ensure the economy's stability. However, there has been increased fear in recent years that the Fed's policies could lead to the depreciation of the US dollar and the loss of wealth for American residents. In this video, we'll look at Peter Schiff's point of view that the Fed will take all your money and the reasons behind his belief. The Fed is a frequent target of Peter Schiff, an American stockbroker, financial analyst, and CEO of Euro Pacific Capital. He believes that the Fed's actions are unsustainable and that the US dollar will eventually collapse. To understand why Peter Schiff believes that the Fed will take all your money, we need to first examine the Fed's policies. The Fed has two main tools to control the economy: monetary policy and interest rates. Monetary policy involves adjusting the money supply to control inflation and stimulate economic growth. The Fed can increase the money supply by buying government bonds or other securities from banks, which in turn increases the amount of money banks have available to lend. Conversely, the Fed can decrease the money supply by selling government bonds or other securities, which reduces the amount of money banks have available to lend. The Fed can lower interest rates to encourage borrowing and stimulate economic growth. Conversely, the Fed can raise interest rates to curb inflation and prevent the economy from overheating. The Fed's policies have been highly accommodative in recent years, with interest rates at historic lows and the money supply expanding rapidly. The Fed's response to the COVID-19 pandemic has been particularly aggressive, with the central bank increasing its balance sheet by trillions of dollars through quantitative easing. In an interview with Greg Hunter on the USA Watchdog podcast released recently, economist and gold bug Peter Schiff issued some severe warnings about where the US economy is headed and the ramifications of the Federal Reserve's fight against inflation. The months of declining inflation are in review mirror, Schiff said, citing recent economic data such as personal consumption expenditure price index, which climbs to 0.6% in January. And now, as judged by these official indexes, we're going to witness rising inflation. However, Schiff believes that simply raising interest rates will not suffice. We also have to see a huge decline in consumer credit. We need to see lending standards rise so that customers can't continue to spend, he explained. People are making purchases, they're piling up credit card debt, that's inflationary. Consumers must refrain from spending, the economist emphasised the importance of people working, producing and conserving rather than spending. Schiff emphasised that American saving rates are approaching record lows, while credit card debt is near record highs. Schiff points is that inflation data could worsen as 2023 progresses. According to The Economist, the market and the Fed may be unprepared for this eventuality. According to Schiff, increasing interest rates hit the property market and cause some temporary easing of inflationary pressures, as well as the GDP benefiting from the strength of the dollar, which reduced the cost of imports. Everything is going to change, according to Schiff. The dollar's value fell significantly in the fourth quarter and will continue to fall in 2023. This might exacerbate the trade gap and increase inflationary pressures. The Fed's main challenge, according to Schiff, is an increase in inflation statistics and a decrease in economic metrics, which might lead to major policy decisions about which is more essential. Schiff referred to this as the Fed's $64 trillion question. I believe it will be a greater, deeper recession than anything we've seen in our lifetimes. Those who do not lose their employment, according to Schiff, will suffer in the economic current scenario. A lot of people will lose a lot of money. The majority of investors will lose money, according to Schiff. A crash is proportional to a boom, and the United States experienced an extraordinary boom. This is going to be a bad hangover. It is what will make the recession more painful, he added. Schiff's claim is built around a few crucial points. First, he believes that the Fed's monetary policies will result in a rise in the total price level of goods and services in the economy. This will eventually cause the US dollar to depreciate because it will require more dollars to buy the same amount of goods and services. Second, Schiff claims that the Fed's policies are causing asset prices to rise, including those in the stock market, real estate and other investments. This is producing a bubble that will eventually burst, resulting in a huge crash that would wipe out millions of people's riches. While Schiff believes that the Fed will eventually turn to outright money printing, often known as quantitative easing, to help the economy, this will result in even higher inflation and further depreciation of the US dollar. He recently restated his concern that the Fed's practices will eventually lead to the exploration of people's wealth in an interview with Kitco News. He contended that the central bank would use negative interest rates, which would require consumers to pay the bank to keep their money. As a result, consumers will withdraw their money from banks and invest it in cash or other assets. Schiff believes the Fed will then take action to discourage people from keeping their money in cash. He claims that the central bank will either restrict the use of cash entirely or create a digital currency that will allow it to trace people's transactions and more readily take their riches. According to Schiff, the Federal Reserve's policy of printing money and keeping interest rates artificially low has led to an increase in money supply. This in turn has caused prices to rise, leading to inflation. Schiff believes that the official inflation numbers are understated and that the real rate of inflation is much higher than reported. Schiff argues that inflation is particularly harmful to ordinary Americans who are struggling to make ends meet. He points out that the rising prices of essential goods such as food, gasoline and housing are hitting the poor and middle classes the hardest. He also warns that inflation erodes the value of savings and retirement funds, leaving many Americans with less purchasing power than they had before. In Schiff's view, the Federal Reserve will continue to inflate the money supply and devalue the dollar as long as it can. He argues that the Fed is more interested in propping up the stock market and the financial sector than in protecting the value of the dollar. He believes that the Fed will not take the necessary steps to rein in inflation, such as raising interest rates, because it would harm the economy and the financial sector. So how does Schiff believe the Fed will take all your money? He argues that the devaluation of the dollar through inflation is a slow and subtle process that erodes the value of savings and investments. As the dollar loses value, it becomes harder and harder for people to maintain their standard of living. Schiff believes that this process will eventually lead to a collapse of US economy and severe economic downturn. Schiff advises Americans to protect themselves from the effects of inflation by investing in assets that will hold their value in the face of inflation. He recommends investing in gold, silver and other precious metals, as well as investing in foreign stocks and currencies. Schiff also advises people to reduce their reliance on the US dollar and diversify their assets internationally. Well, Peter Schiff's opinion on inflation and the Federal Reserve is that the policies of the central bank are leading to the devaluation of the US dollar and the erosion of the standard of living for many Americans. He believes that the Fed will continue to inflate the money supply and keep interest rates low, which will lead to further inflation and economic hardship. Schiff advises people to protect themselves by investing in assets that will hold their value in the face of inflation and reduce their reliance on the US dollar. While Schiff's views are controversial and not shared by all economists, they do raise important questions about the long-term effects of the Fed's policies on the US economy and the financial well-being of ordinary Americans. So that's all for today guys, let us know your opinions and questions in the comments, and if you've enjoyed the video hit the like button. And for more interesting videos like this, subscribe to the channel and don't forget to hit the notification bell. Thanks for watching and we'll see you again in the next one. Until then, peace.